afternoon, everybody. Selamat sore, semua, and welcome to this second edition of the Medici FinTech series on Indonesia. So 2 weeks ago, on the eve of the 75th Indonesian Independence Day, we talked about how FinTech growth started as mobile services matured, as the payment rails became more structured. And now we are at a very interesting crossroads where you see the digital platforms both collaborating with the banks and their consortium. We also see the big credit gap as a area where a lot of energy being focused. And we see a financial inclusion truly in play for the first time at scale. So today, to talk about how digital platforms are merging with the physical spaces, how the merchants and consumers are getting the relevant services beyond payments for goods and services, reaching up to investments, reaching up to savings in a better way, reaching up to credit, both in terms of secured and unsecured credit. We have a stellar cast. So we've got the CEO of KoinWorks, Benedicto. We've got Nicole Oesman from Tokopedia, who heads up credit risk there. And before, she was also with a P2P lender. We've got Kiki Ahmadi, who is quite active and knowledgeable, both about the bottom of the pyramid services and also about the corner shops. And he is a prolific writer as well. And we have a venture capitalist who founded Quona Capital, which counts as its core principles and thesis inclusion and emerging markets. So let's start listening to Nicole talk about how her journey has been, what she's doing at Tokopedia, and what her priorities are for the next couple of years before we open it up to the other speakers. So Nicole, why don't you tell us about what's happening in Tokopedia and what's keeping you busy?
Okay. Hello, everyone. Good to be here and share my experience with everyone joining this webinar, as well as with the panelists. As per has been informed by the Subrendo earlier, I manage credit risk as well as the credit score and modeling within the Tokopedia FinTech organization. And predominantly Tokopedia FinTech and payment, just from the name of it, we are managing the payment side of buyer and the seller, as well as any kind of loan facility that we also extend to our buyer and seller groups, which we name it personal lending or merchant lending. And last but not least, we have investment insurance product as well that we offer to our buyers and sellers through our FinTech category. And the most recent one that has been launched probably around 6 months ago is our product and services using e-commerce data points that we collected through marketplace, whereby we are extending it and to external parties with the B2B cooperation kind of concept for the credit score as well as the verification support that we can provide to the financial players out there, ranging from the banks, multi-finance, as well as the P2P players to give more information about some of our users or buyers who happen to apply any of the financial service product that is actually sitting on the partner side. Okay, so I think these are the probably the scope and areas where I've been predominantly working on for the past year or so, and obviously, having a stable infrastructure as well as the seamless process for any kind of onboarding until disbursement time will be our key focus, not only extending loan facility, but since the overall umbrella is still within Tokopedia, and whereby we value a lot on the customer journey to make it seamless and easy to understand. Hence, this is also being adopted by FinTech and payment to ease the not only I think financial inclusion, which is like a very big picture of it, but also to educate to the customer and seller, what are the facilities out there that is actually can be uh, extended to them, and without them having the fear of, oh, I don't want to take loan because it's just, so many documents and so many processes, a lot of verification. So we educate them that if they apply through Tokopedia as part of the integrated platform, that is actually not the case. So those are the areas that I'm focusing on, also with the business side of FinTech and payment team.
Thank you,
Thank
Nicole.
you.
Benedicto, I'll request you to go up next and talk about how KoinWorks started. So was it something that started when you were in the US and you had the plans then, or was it after you came back and then realized the opportunity is on the ground?
Certainly, I think the idea that we had regarding peer-to-peer lending started coming out earlier on, like back when Lending Club first started, Prosper, all these developments coming up from the Western world was, I think, starting from the last financial crisis. But I mean, our issue to start discussing it for real, to start something in Indonesia along the same lines, didn't start until later on, because we do see that the amount of data that's available for us to assess creditworthiness, there's not enough infrastructure, there's less foundation to build upon in Indonesia. I think it was only in 2015 that we, myself and my co-founder, finally took action. Like we saw that things are improving, there's more and more data being available, and even then, our first approach back then was to give lending to e-commerce merchants because they have the most data available, real cash flows happening. And of course, back then it was Tokopedia and Lazada were our first partners in launching this product in early 2016. And quite a journey. And definitely we still concentrate in our own middle segment. So we don't go to micro where Amartha is active in, nor do we go towards the bankable market, but we like the kind of the middle niche that we are having right now. And in terms of, I think going forward, I think we are putting a lot of our efforts into really riding the wave of post-COVID, right? Where I think a lot of businesses are accelerating their digitalization. And I think in terms of the government is also having a high priority in terms of transforming the economy into a more digital form rather than pure over-reliance on the physical side. And I think the other side is that how do we navigate the aggregated market that we have in Indonesia? I think Indonesia is quite a unique country where even the brands dominating the market, compare it to the leading brands in the US or in China. So I think for us as a FinTech player, how do we onboard customers and how do we assess credit where data is being spread around all over the place as well, right? A customer in Tokopedia, a merchant in Tokopedia will also have a shop in Shopee if they're big enough, right? Or they might have a shop also in Lazada. So how do we combine all this data to create a scoring method that is more holistic? I think that it will be a challenge going for the next 2 to 3 years before the market consolidates better.
Got it. Thanks, Benedicto. Kiki, you have been active on talking about the pain points of the warungs, the corner shops, and you are with Amartha, which is really taking financial inclusion to the remote far-flung areas and looking at the group lending. So talk about how your professional journey has been and what's top of the agenda for you at Amartha.
Okay, I work in Amartha. Amartha is peer-to-peer lending, similar to KoinWorks as well, but we focus on Amartha is really focused on three areas. The first one is rural Indonesia mostly. Second one is women. So 100% of our 500,000 borrowers are women. And also we are currently very focused on productive lending, so business lending, SME lending. So basically all of our loans are productive, so it's not consumptive. So because of the segment that we serve, so basically the product, the process, and how we reach those segments are very tailored. That makes us quite a difference between other peer-to-peer lending who are like Ben, KoinWorks is fully online, right? But since we're serving rural areas in Indonesia and on the different island outside Java, so we do offline to online to offline process. Our app is offline first, so it can work without network connectivity. So how I end up in Amartha basically is coincidence. So I spent 7 years in corporate strategy in telco in Excel. I got a government scholarship in Manchester to study digital innovation, and then Tovan, the founder, somehow we connect and found me when I was start to went back to Indonesia, and he tell me the story about Amartha, and I think that's quite a good challenge. So basically, because it's quite personal also, because my father is my grandfather owns a warung. So basically, my father life has been financed by a micro business. So I think that makes it interesting. So day to day, I'm responsible for a business development. We're currently working on how to develop multiple financial service outside of lending to better serve our ibu-ibu or our women borrowers. So basically that.
So I'll come back to you, Kiki, on the low default rates relative to the average industry and whether it is correlated or the reason is that you lend it to women. So maybe it's an interesting topic for the discussion as we come back. But also we have with us Ganesh, who is the co-founding partner at Quona Capital. And he has a track record of investing in good, solid businesses that are looking at reducing the imbalance, creating more inclusion, and their focus has been on emerging markets. So we've tracked their portfolio for some time now. It's always interesting. So Ganesh, tell us what Quona is looking for and why is Indonesia such an exciting market for you?
Thank you. Thanks, Shubhendu. I think it was very interesting listening to Nicole and Kiki. I listen to Ben all the time. I'm on the board of KoinWorks. So it was good to hear from others as well, and a good opportunity for me to learn. So just to give you a quick context, Quona is, we are probably the largest inclusive fintech fund in the world. We operate across emerging markets in Asia, Africa, Latin America, and GCC as well. Our largest markets are India, Indonesia, and Brazil. And Indonesia actually in the last couple of years has grown pretty rapidly. And in fact, we just made our fourth investment in the last 18 months in Indonesia with Buku Warung. So it's been a pretty rapid scale up. And our focus is broadly fintech for the underserved and unserved target segments. And if you look at fintech solutions across the board in our markets, and this is very reflective of the situation in Indonesia as well. I think we all realize the degree of inefficiencies across the various offerings for consumers or SMEs. So thematically, I think a large part of the market segment, even though solutions exist, is still challenged by friction, inefficiency, lack of convenience, lack of data to be able to appropriately underwritten or appropriately insured. A lot of friction in being able to access solutions that make sense for customers in a targeted sense. I think these are common themes across our markets, fairly pronounced in Indonesia as well. In terms of, and I'll just make maybe one more comment on the type of things we invest in and then talk specific to Indonesia. Quona is all, for us, Quona is an entrepreneurial venture. We are all entrepreneurs who have become investors. So it's been 6 years journey, and our focus has really been on backing sort of backing entrepreneurs who are creating financial innovation to achieve certain end goals and outcomes. So it's really financial inclusion and leveraging technology for financial inclusion for end outcomes, whether it's in smarter commerce, helping grow businesses or education or healthcare or mobility or agricultural, so on and so forth. So it's always use case based solutions and not finance for the sake of finance. Specific to Indonesia, I think the number of things which we of course find we found exciting. I have personally been working on Indonesia, working in Indonesia and sort of opportunities in the region since 2008 when I had my startup, and so have seen the market evolve. It's been a tremendous evolution, especially in the last 5-7 years. I think obviously in every evolving and emerging market, a lot of friction exists, so nothing is perfect. But at the same time, the degree of digitization of the ecosystem in general has been quite encouraging. A lot of folks, like Ben, have come back to build enterprises in the country, which is a huge signal of how the talent in the market is evolving, and folks like Kiki and Nicole and Ben, actually taking on big challenges in startups to make things happen. And usually that's a big sign for us. There is also more availability of capital and eagerness from the ecosystem to be able to back promising enterprises. And some of the things you talked about, Shubhendu, when you started the discussion was around how various rails are coming together from a regulatory and newer systems perspective, from a public systems perspective as well. And overall, also, obviously, while challenges exist, the standard of living and the consumer and SME ecosystems are starting to evolve quite actively. And needless to say, of course, it's one of the largest ecosystems in Asia outside of India and China. So for a number of given some of the large markets we operate in, we see several interesting similarities and overlaps, let's say between Brazil and Indonesia on one side and India and Indonesia on the other side. And that also helps us leverage a lot of cross learnings and hopefully our portfolio companies as well. So a lot of reasons because of which we are quite excited about investing in Indonesia.
Fantastic. So let's talk about the general theme around the marketplace lending, because we've had commerce platforms come up over the last 5 to 7 years, and that has brought in the SMEs. And there, I think a fact is quite unique to Indonesia, that for every one small or medium enterprise, there are 100 micro enterprises. And that ratio is very different from other emerging markets, given the fact that even your household debt as a percentage of GDP is around 16, 17, 18%, you have a big room to grow. So when we talk about peer-to-peer lending, everybody who's taking an outside-in view talks about China, right? And then, everything is not healthy about the peer-to-peer lending market in China. So why and how is the Indonesian marketplace lending evolving in a different manner, in a different cadence, that gives you the confidence and the excitement that it's not going to froth over or bubble over in the same style that China did? So I'll open it up to anybody who wants to take it up, probably Nicole, because you've seen both the marketplace P2P lending, but also you've now seen the e-commerce marketplace. So maybe your thoughts on how this business is growing at a different direction and a different pace, and seems to have a higher chance to grow than what happened in China.
Okay, so I'll try to answer this one. Basically, I think the fundamentals are has been mentioned by Ganesh earlier. Yeah, the fact that data availability in this country is rather challenging to properly assess any kind of a borrower. And on top of that, the banks is also not willing to actually go above and beyond to tap into the underserved. So they have the wants, but they don't have the what it needs to be there to actually tap into the segment. Okay, hence this P2P market becomes the play field for all the either local or even offshore player, right? Now, in terms of the how the players can actually coexist together and to ensure that everyone's portfolio quality will be healthy, uh, you know, every institution have their own risk appetites and hence adjusted to their pricing model. I think for period before COVID, I'm sure it's really up to just either the institution or even the borrower to 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 select, yeah, of what kind of product that is suitable for their own needs, as well as the profitability of the institution. However, I think then COVID came as a very extraordinary period that we are currently going through, whereby the P2P players who used to be able to overcharge customer just to make sure that they are getting the break-even point faster will not be able to exercise the same approach during COVID time, right? And I think to your questions, going forward, how do I see it? The P2P industry, I think very soon it will consolidate by itself, and only the stronger in a context of their expertise and capability to actually not only to underwrite properly but also to collect will survive, and also those who actually value the customer in a manner that how customer is supposed to be treated. Yes, so because within our fintech platform currently we have around 30 plus partners that is already engaged with us just for fintech, like trying to basically offer their loan facility product from credit card, personal loan, even secured loan through us. And when COVID came, I think we kind of already observed this consolidation happening since I believe it was end of April. Yeah, end of April. And with the stop of the disbursement immediately to completely nothing, some still actually open for very selective, and some is still actually conducting their lending business BAU. Okay, so we can actually already see who are going to most probably survive, who are having a difficult time, and who are already kind of struggling even back in May. Yeah.
Thanks, Nicole. Benedicto, Kiki, would you have any views on that in terms of how it's going to grow and why it's different from the China scenario?
Okay, Paben, do you want to go or?
Sure, go ahead.
So in a matter of fact, I delivered the exact topic, I think last year in Tokopedia also, the speech. So the difference between peer-to-peer lending in China and Indonesia. So I see that if we take peer-to-peer lending in China as a cautionary tale, we see that I see that there are three factors that why it becomes so. We can say it's a crisis in 2019, right? So the first one is so in 2014, where peer-to-peer lending in China is growing, there are no clear regulation on how to, I mean, like the code of conduct and everything for about 5 years. So it's a wild west lending in 5 years. So China at those time is similar to Indonesia, has a pretty massive unbanked population. So when the faucet of lending become open, easy, and like straightforward, and it become like a lot of people who haven't got credit before, and now they can get credit. So clear regulation. So there are no clear regulation. There are a lax requirement on the founding of a new company or new startups on peer-to-peer lending. And the third one is there are no data integration between fintech and banking. I mean, like, so if if people get a bad credit history in in fintech, the bank doesn't know that. So it creates lots of bad credit and so forth. Luckily, when Indonesia in 2016, OJK, the regulatory of Indonesia has been very progressive. I think Pak Ben also felt that also. So in 2016, even before, I think even the term peer-to-peer lending started, OJK already have clear regulation, which is POJK 77. So the regulatory framework in Indonesia is more clearer, and the founding of the FinTech Association, which drive the development of share data between fintech and banks. So I think if we compare China and Indonesia in terms of regulatory and how the players self-regulate themselves, I think the ecosystem is much more healthier in Indonesia. So that's why even though peer-to-peer lending hasn't always been shine in a positive light, but I think it's much more healthy and much more better for the customer compared to what we have in China. And if the question is what are the potential, I think the potential is immense. Unbankable population is half of the country, which is 100 million plus. And if we take that's on average, right? As an illustration, we have right now the total financing market in Indonesia is about, I think it's about 800 billion US dollar or 8,000 trillion rupiah. 70% of that is still in one island only. It's in Java. So the opportunity are immense, and outside of Java, it's basically like no man's land. Yeah, so that's
Thanks, Kiki. Ben?
Yeah, I just wanted to add a little bit. I think Nicole and Kiki have pointed out correctly that the government has taken action much earlier than as compared to China. But another, I think, point that is quite unique, I think, is the market itself in terms of the culture of the Indonesians versus the Chinese population. In regards to how most of the people here, I think, are more conservative as compared to Chinese in terms of being aggressive in the business or adopting new products. On one side, it means that people are less of a risk taker. But on the other side is that it means that acquisition cost is probably a bit more expensive in Indonesia compared to China. If you compare apple to apple, but if you compare in dollar terms in China, because maybe the advertising cost is much more competitive, it might end up being more expensive than Indonesia. But it comes back to the point that Nicole also mentioned, that a lot of people, players previously that came in and they were much more active in payday lending. The strategy was taken from the Chinese playbook, right? Try to charge the customers to can out the bad credits you might have. And I think that strategy is going to be very much challenged during this COVID period. But I think in terms of the non-payday lenders, there's no such strategy that's being brought up in terms of the peer-to-peer lending in Indonesia. Most of the productive lending guys, they are charging pretty reasonable rates. So it's never been their playbook. Yeah, and so it's quite different in terms of how we, the risk appetite and how we manage the lending business here as compared to China. And I think in terms of, I guess the consumers themselves, they're also not like blindly going into peer-to-peer lending and say like, hey, this is my money, manage it for me, and then I'm just gonna sit tightly and expect returns. You know, Most of the, I think, lending model here is not, it's still mostly like active management by the customers, not being managed by the peer-to-peer platforms themselves.
Thanks, Ben. So overall, I think the business fundamentals are strong because as a borrower, I have to pay less compared to the unsecured loan from a retail bank. As a lender, I'm going to earn more than a term deposit if it's for 3 months or 6 months. And you as a marketplace provider can still make that 2%, 3%, 3.5%. I don't know how much exactly you're making, but it's a healthy business. But then if you look at what we talked about, these two categories that probably become more relevant at the bottom of the pyramid, and we talk about this productive capital or the productive lending, and we talk about the consumptive lending. So has there been any conscious effort to balance out these two in Indonesia? Because I saw some numbers that it's projected that the gross value added on the productive lending is around 45 trillion rupiah. On the consumptive lending, the gross value added is around 35 trillion rupiah. So it seems to be more balanced than what we see in other markets. So is it by design? Is it just a way that the market has developed? Is it uniquely Indonesian that you can get credit for consumptive uses, but also for the productive uses? So what's been your experience? And also, Ganesh, do you see this as a common thread in the other emerging markets, or is it something that's really truly uniquely Indonesian?
The question is it more productive or consumptive
It seems to be a balance of both to an extent. So do you see the same in other countries that you invest in?
Sure. So actually, before that, I'll just quickly make one point on your previous question, which is, while we talk about P2P lending, and I say this often, we have about 12 lending portfolio companies across 7 markets, but 7 of them are sort of marketplaces. And frankly, P2P has become a misnomer now. In fact, KoinWorks is probably one of the most true to P2P marketplace platforms in terms of having a balance between institutional and retail in lender base. But generally, the way P2P scales as they start evolving is that you need to obviously have institutional investors as well. Otherwise, frankly, there's almost no country in the world where retail lenders have scaled in parallel to the demand from borrowers as fast. Once the flywheel starts spinning, and without going into the China discussion, part of the challenge in China was the demand, the supply flywheel on retail side started catching up with demand, and a lot of people didn't know the risks of doing this lending, and then realized that they lost their money and all that. But the P2P version 1.0 is different from the way it's evolving today. Now, some of the companies that Ben talked about, which were inspirations, were quite different from how the emerging market players are evolving. And to your point on productive versus consumptive, so we have right now four of our portfolio companies in Indonesia attacking productive lending in different ways. So quite frankly, including a company in consumer lend, which is sort of a consumer lender, but really focused on the productive side for individuals. So I probably have a bias where I've been quite excited by the fact that there seem to be more relevant productive lending use cases. And like I said, all of these 4 portfolio companies are attacking, lending portfolio companies are attacking it from different perspectives and different parts of the value chain. And in general, if you look across markets, I think these cycles kind of reinforce themselves. So there was a cycle of payday lending, and frankly, we have always been nervous about it. In fact, we have talked to OJK about it very openly. We have talked to BSP in Thailand about Philippines about it very openly. RBI in India about it very openly, saying the payday lending cycle is vicious. I mean, in the interest of time, I won't go into that, but it's not healthy for anybody eventually, except for making money in the short term. But if you leave that cycle aside, generally we have been excited by the fact that lenders who take a longer term view, of course, on the SME side, it naturally lends itself more easily to productive lending, but even on consumer side, we are starting to see that lenders who take a longer term view are starting to appreciate the fact that having use case based and more productive, or evolving standard of life, whether it's education, health, home improvements, so on and so forth. They're trying to channelize energies more towards that than being pure play cash loan players. I mean, I'm not saying it's gone, but the balance is tilting towards productive, or maybe that's the lens we apply, which makes me at least feel better about the ecosystem.
Thanks, Ganesh. So, from the speakers that we have today, just want to see and explore if having for Amartha and KoinWorks, Bank Mandiri as one of the early cheerleaders gives you some kind of an unfair advantage, because maybe the cost of distribution, cost of repayments is lower than other platforms, because you've got the ATM networks, you've got other channels. And also, Nicole, for Tokopedia, because you had a marketplace for commerce, it's easier for you to provide these two-sided businesses. And even though you would be extending the buy now, pay later to the consumers, it will probably not spill over into your sellers' lending activities who are borrowing from you. So, being backed by the bank for Amartha and for KoinWorks, and having that role as a marketplace for commerce, does it give you, let's say, unfair advantage? I wouldn't call it an unfair, but an advantage over the others.
I think it's not in payments. I think a lot of the banks, even I guess back in the early days, 2018, and even until now, the banks are still having difficulties in onboarding everything, all their processes into the online ecosystem. So I think in terms of payments, they're still quite behind. There are some banks that are, I think, proceeding forward, and I don't blame it fully on the banks themselves, but really also on the compliance side. OJK is opening up more and more, but I think even now, for them to do full digital KYC, they're only awarding the banks on a case-by-case basis, rather than coming up with full regulation in regards to their KYC for the banks requirements. Yeah. But I think in terms of the advantage that we got from onboarding Mandiri is more towards the branding association. I think that's definitely helped a lot, because back then, nobody knew about peer-to-peer lending. Nobody knew about KoinWorks or Amartha that well, right? Associating our brand with one of the nation's biggest banks is definitely a plus, to kind of like tell people that, hey, we have a big bank backing us, so it kind of like telling the message that if anything happens to us, there's Mandiri to clean up. But it's kind of like having that subconscious in terms of brand positioning, that, like KoinWorks is a trusted brand, same with Amartha as well.
Yeah, I really agree with Pak Ben said about the early involvement of status quo, right, in banking in this new beast called peer-to-peer lending. So it basically, in the early days, it gives us legitimacy on the industry. So it's not like shady payday lenders online, because we have some big banks invest directly on several other peer-to-peer lending. But not only just that, many commercial banks, especially bigger banks, jumping directly to become our institutional lender. Because I think one of the reason why is, I think this is an unintended consequence. Basically, OJK have a regulation that mandated so the big banks have to lend 20% of their portfolio to the MSME. So having peer-to-peer lending on a channeling loan basis, it's actually helped the bank, because they don't have to manage the operational directly, but they still can, compliant-wise, they say comply to the those regulations. So that one is one of the unintended consequence of those regulations, even though that regulation, as far as I know, is created before the peer-to-peer lending. But on the other side, we see that commercial bank is also competing directly right now, because they see the the potential, and they see like the threat, because right now, I know it is in the past 3 years, it's been like 10x, 10 to 15x industry growth. So for example, BRI, they started to have their own lending, their own online lending. They also have their app for installments. So some of the banks are also not only supporting, but also competing with the peer-to-peer lending.
Thanks, Kiki. Nicole, question to you. So we've seen the e-commerce race for market share and dominance really heat up now in Indonesia, especially with the new entrants coming in. And now everybody wants to look at the payment rails, the payment gateway functionality, add the microfinance, the installment plans, add the buy now, pay later, become a full-fledged retail mini-mart for financial services. So are you also taking Tokopedia into the same direction? And in terms of what that entails from a credit risk, is it more in terms of credit risk per se, or is it more around fraud? Because from a commerce marketplace perspective, you would have seen fraud happening both from the buyer side and the seller side. So extending that know-how into a lending environment could become a quite natural fit. So how is Tokopedia changing? How is it evolving?
Okay, so maybe I'll try to answer both your earlier questions and this one, yeah, in terms of, we as a marketplace whereby we are seeing a lot of behavior of our buyer as well as our sellers, wouldn't it be unfair towards other P2P per se? Okay, basically, yes, if you look at from that angle perspective, it looks like it's unfair. However, the spirit or the vision of Tokopedia FinTech is actually not to monopolize the whole lending ground within our marketplace. As you probably aware, just now Benedicto already mentioned that KoinWorks is actually also intact with Tokopedia for the merchant lending product. And for the buy now, pay later, we also have several other players who are today in production, like ready for home credit, OVO pay later. Yeah. So the reason being that why we are also come up with our own product is mainly because from the data perspective, of course, we have more visibility as to compare to any external players. However, when we would like to extend those information, we are restricted by our own internal data governance policy, which we value the most, yeah, because this is about the trust that the customer and the seller provided to us. Hence, even though transaction or behavior or any behavior that may not be actually transactional in nature is also PII to us, okay? To the level of very simple, like shipment details, like shipment address. Why we can't share shipment address to any banks or any multi-finance? Because there's a reason why that the customer probably adding more addresses into his profile to ship their products, which we may not know any particular personal reason behind it. Hence, we don't have the right to share that to external parties. Now, the thing is, because the lack of data that we can share to our fintech partners, then the coverage of the financial inclusion is also become very difficult to be reached, right? And that is also the reason why that this year we actually launched our e-commerce credit score and verification services, whereby we aggregate those information that we accumulate over this period of time to become a score index that we can actually share to our partners, okay, or even not to partners, because the fundamental objective from our side is, yes, we do have very rich data in terms of the transactional as well as a payment, And we were willing to actually share those in a way of the score that of course we also will try our best to actually making sure that those scores are quite predictive. It's not just, it's a model that we have actually invested in for about 6 months or so before we try to pilot it to the market. So I think we hope that by combination of the fintech product and services as well as this score product or Toko score, it can support the overall industry in terms of the providing the loan facility for the underserved. So I think predominantly that's what we are. That's always be the the DNA that is actually run across the fintech team, not to actually dominate it or to take more priority aside from the other partners, but to support the partners and also to support our ecosystem, basically.
Got it. Thank you, Nicole. So, question to you, Kiki, Ben, because you earlier mentioned that Amartha and KoinWorks are almost at these two extremities of the digitalization. So, Benedict was talking about how the lender dashboard is also getting automated, how they are getting more investors on board. And then, Kiki, when you are dispersing the loans, right, it's in some remote village and it's through the agents. So is your cost structure very different from KoinWorks? So is it very costly to have this agent network, and that's why you have to rely on having a very, very low default rate and a very low NPL to make that business possible? Because you will be relying more on the community-based agents and having real cash probably moving in and out of these remote villages. So how do you manage that?
Ben, first, I think.
Yeah, go ahead.
So yeah, definitely. So since I think referring to what Ganesh said previously, like peer-to-peer lending is because there is a huge, even though it's a one industry, but there is a huge difference and variation models. So it can be very different. Like KoinWorks with Amartha is totally different. On the segment, on operational model, how we measure, how we do credit scoring to our borrower is obviously is going to be very different. And answering to your question, so Amartha started, Tovan, our founder, Amartha started as a small cooperation. So the model is Muhammad Yunus Gramin Bank, right? So yeah, right now we currently rely on a networks of agents to disburse the loan. Still, a lot of it is still cash based. So you brought quite a good points, because the cost structure is very different. That's why our NPL rate is also different also, because basically we met with each one of our 500,000 borrowers. So basically Amartha met directly. So it cannot be said that I think a lot it's not common for fintech to say that. So the operation cost is quite high, but we managed to the NPL is the risk factor in NPL is also very low compared to, because the difference of our model. But I think, but mentioned by Pak Ben also, this pandemic times, this COVID times, I think one of my team focus for this year and also next year is also increasing this digitalization of our borrowers, because we see like a lot of people in Amartha operate on a village level. It's not even a city level. So from our area operation, we even see like mothers in their 50s trying to learn how to use a WhatsApp, because there's no other way, right? Right now they cannot go to their family, so they learn. So basically, we want to capitalize that to make Amartha more digitalized and also cashless in the next 1 or 2 years, basically. So that's the journey that we are currently going.
Interesting point, Kiki. So, Ganesh, we heard about WhatsApp, and you know that in India, WhatsApp is saying, "Oh, we are starting to be a financial juggernaut. We will start making loans." So, I'm sure that model may come to Indonesia as well. So, what happens when Google, Facebook, Amazon come to Indonesia? So, what does the Indonesian market look like in 5 years from now if WhatsApp starts making these loans inside their own platform?
Yeah, whatever it looks like, I hope it doesn't look like the Indian ecosystem, which is quite messy right now. So I think, look, the projection of the fear of these things happening is frankly quite higher than the reality of the fear. So if you take WhatsApp, WhatsApp has been piloting in India for more than 2 years. Okay, and the regulate and I'm one of the million customers they've been piloting with. So the pilot itself is million customers, but WhatsApp for payments, sorry, but WhatsApp has over 300 million users in India, and obviously it's very much part of people's life, like in number of other emerging countries. But the WhatsApp payment journey hasn't been easy. So even payment, they haven't been able to get it going and give the regulators comfort on data privacy and security and safety and all of that, and fraud till now. That might change with some of the new partnerships and investments that have happened in recent times. But they have a long way to go before they can provide other things. And the second point is, most tech companies in India, or almost all smart tech companies, do not want to take balance sheet risk. And when I say India, I'm talking about the global players. So Google, we have multiple portfolio companies that work closely with GPay, multiple with WhatsApp, Amazon, PhonePe, right? Nobody really today, everyone's got wiser in 2020, saying balance sheet risk is not our game. We don't want license. We don't want to be regulated by RBI, right? PhonePe had a different approach 2 years ago when Walmart bought Flipkart, but Walmart said that we don't want to do anything with balance sheet. Right, so PhonePe is really, and we have a portfolio company which actually powers now the consumer lending, BNPL for Flipkart, Amazon, and PhonePe, all three, called Zest Money. So fundamentally, the tech players don't want to take balance sheet risk, and so the adoption of lending will be slower, and from their perspective, and their control on lending will be limited. I mean, they will have obviously relationship with their users, but they don't have collection infrastructure. They don't typically want to have underwriting infrastructure, and they won't have the balance sheet. So there will be a great distribution channel. They'll be source for good quality data. But I think as maturity sets into the markets, I think the big players and young and incumbents and the new players start figuring out what's the balance. And that's the balance you are starting to see evolve in India now, though in a very painful way. And my hope for Indonesia is that I think we can learn from India and do it smarter. And I won't name the companies on a public forum, but we have made 2 investments in Indonesia recently this year, both of which the most time spent on these discussions was looking at 3 large players in these 2 spaces in India and talking about what all they have done wrong and how this company should do it differently in Indonesia. And hence it was a lot easier investment thesis, frankly. So in some ways, I think as markets mature, you learn in painful ways to find balance. But hopefully we can be smarter in Indonesia and learn from what's happening in a market like India. And I don't think the global tech players really want to take balance sheet risk in any market. They're learning that it's not the smartest thing to do.
Thanks. So one of the important topics when we talk about alternative database credit and lending along this marketplace route, it becomes the digital identity, not just for the individuals or the citizens, but also for the small, medium companies. So, of course, in Singapore, you've got a very different environment where you've got a very specific company ID and also an individual ID. So it's easy to play with this. But in Indonesia, how is it maturing? Because I remember earlier we had this concept of BI checking, and now for the retail banking sector, you've got Slick. For the online marketplace lenders, you've got Pusdafil. So unless the two sets of data talk to each other and you can identify that it's the same customer or the same business, which is on two sides, you'll always have people who are trying to game the system and then trying to do funny things on the fraud angle. So what needs to happen, and do you already see that happening in Indonesia now? So open question to everybody, because we see that there are these two large regulators. So the Bank Indonesia, the central bank, is looking more at the payments and the payment gateway and the payment infrastructure. And then the OJK is looking more from a financial services and the financing angle. But then the interplay between financing and payments is getting more fuzzy. So are we moving towards one common database, one common data set that will then merge both Slick and Pusdafil, or will they still remain separate?
I'll try to tackle this one. I think in regards to KYC and credit assessment, KoinWorks has any fraud of identity is only a fraction of that NPL. So I don't think it's impossible to do. The data is fragmented, yes, but it's being owned by multiple places, right? Tokopedia does their own KYC, KoinWorks does our own KYC. The banks that we are transferring the funds are doing their own KYC as well. I think the regulators are staying on the conservative side, in which they are resisting to have a one-stop KYC to everyone. They don't have one standard yet, and I think it's actually a pretty good decision given how the data is fragmented right now. They're staying on the cautious side, ensuring that everybody who are enforced to do KYC are doing it on their own independent channels. At the same time, they are building up the capability of data sharing. So even now, the Pusdafil, for example, not Pusdafil, sorry, the civil registry data, they're already making big efforts in terms of making that data available to FinTech players and even the banks as well. Now, even the criminal database, the police database is also somewhat now being open for financial players to kind of check if people who are applying to us have criminal records or not, as part of the underwriting, or even links to terrorism and all those kind of things. So I think probably the government effort will be more concentrated in upgrading those capabilities first before eventually forming a single connected database.
Thanks, Ben. So we are coming towards the close of the hour. We are close to our finished line, but we have a lot of viewers who are from outside of Indonesia, who either are fintechs themselves or are investors in fintech. So from your total platform, from your partnerships, are there areas that you're looking for help on? Which are the areas where smart fintech companies or those who are coming in from other Southeast Asian countries can help you grow your business in Indonesia? So are there any areas where they can come and partner you with? Do you have everything that you need, or are there areas that you need help on from other startups, other fintech companies in the region, or from Middle East or from Europe?
I think a lot of the work is probably still relies or rests on the responsibilities of the local players. But I think one gap that we are seeing is probably open banking. The fact that Indonesia is moving towards, or at least on the last update, I heard that they were adopting European sets of GDPR. And that also opens up the pathway for open banking system to be adopted eventually in Indonesia. And I think there are some conversations. PI is also having discussions regarding open banking. But I think Indonesia is still very new and definitely don't have the expertise of such a journey. And I think it's definitely something very helpful and healthy for the ecosystem as well in the long run. But I think we still need a lot of knowledge sharing and importing a lot of, I guess, technology and people who have done it before in other geographies.
Thanks, Ben. So before we close, Nicole, probably a question to you around Tokopedia. So what's happening at Tokopedia? What's next that is going to be launched? Anything that you can hint or share with us on what's coming next from Toko?
Okay, so I think this is a good chance for me to become a marketer. So for whoever that is actually reside in Indonesia, this week actually is a big week for us. As you probably, some of you already know that August is the anniversary of Tokopedia. We are 11 years old per last week. And I believe it's from 24th until the end of the month. We have a campaign called Waktu Indonesia Belanja. So please make sure that you check out your Tokopedia app because there's a lot of offers that we are actually extending it to our customer base in terms of the promotion, free logistic and stuff like that. Now for the next roadmap for the, let's say, Q3 and Q4 is actually not only penetrate to more SME players, just like what you said, to onboard more offline merchants to become an online and to educate them how to become technologically savvy, because we are also part of the government initiatives to recharge the economy, not only to support the micro and SME players with additional channel to market their products to our marketplace, but also to support them with the financial needs as per selected basis, basically depending on what kind of categories of items that they are producing, geographical coverage areas and stuff like that. And for the buyer perspective, I think this is also very much mirror with the Chinese COVID impact, that a lot of new buyers also onboarded into our platform since the lockdown and everything. And we hope that in the next quarters or so, we are able to actually sustain this new buyers as well as new sellers to keep on doing their transaction through Tokopedia, and with, of course, features and flexibility and seamless process and promotion that we can actually extend to them. So that's I think predominantly our focus for the next quarters or so until the end of the year.
Thanks, Nicole. So Ganesh, Indonesia, every number becomes 100 billion. So the total addressable market for payments is 100 billion, for commerce is 100 billion, the credit gap is 100 billion. So what's your 2021 thesis, and which smaller segments from these gap areas are getting your attention? So of course, the enterprise and the marketplace lending is clearly there. And we saw that digitalization of the corner shops is also one of your pillars. So any other interesting themes that you want to share where your money is going to go?
Sure. Yeah, I was smiling at what you said because I was just looking up the Ant Financials IPO, which of course is at a the prospectus, which is at a different scale, valuation of 225 billion. So you have a number higher than 100 billion there. But in terms of what we are looking at, I think a lot of our focus has clearly be on it's gravitating more towards digitization of the of sort of productive financial services and the MSME ecosystem. And it's not necessarily financial services in the Puritan sense, but any parts of the SME MSME value chain that can be that can be digitized. And of course, if you can leverage financial services, whether it's payments, whether it's savings, whether it's in credit, whether it's escrow, so on and so forth, to be able to catalyze that and make that happen more efficiently, so be it. So that's definitely one broader theme. Secondly, I think again, second one, in the interest of time, I won't talk about it much because we have touched upon the whole concept of open banking, and we think I mean, Indonesia is in sort of in the infancy of that. I think if you look at some of the other markets in Europe and maybe a little bit, of course, China and US clearly have evolved to a meaningful extent, but maybe the 2 steps ahead of Indonesia is what we are seeing in markets like India, and also even markets like South Africa. So that's something I'm hopeful will evolve in the coming days, because there are a lot of disparate systems being created, and I think interoperability between the systems will become key. But what happens is a lot of large players don't want to be interoperable. So in that context, the whole open banking or open APIs become a good way for folks to protect their data or protect their assets, while ensuring that these services can probably talk to each other to benefit the customers. And the third, I think, is InsurTech, which is also a space we are very bullish about, and are actively exploring opportunities on that side. So yeah, these are some themes which probably are top of our mind right now.
Got it, Ganesh. Thanks. So Kiki, I'll close with you because you are creating women entrepreneurs on the ground. And I think that's a fantastic job that Amartha and you are doing. And have you seen any of your borrowers become lenders on your platform? So have you seen some of your borrowers really come back and say, okay, now we can extend these loans to our community?
Yeah, not yet right now, but I don't know how do you read my mind or look or internal documents, but actually that's one of the our we call that a long shot project. Basically, since the vision is to be since our vision is to help the prosper, right? So if we define prosper, we can break it into stage. I mean, like let's say, so the first one is our ibu-ibu or our woman entrepreneur. First, as they can start a business, and then they level up into they can save, they level up into they can insure themselves from uncertainty, so their business become more resilient, and then they level up again into they can serve, they can invest in the business, the warung become bigger, they can take a bigger loans, and of course at the end of the day we want them to help others, because in terms of help others, as they can, if the business is become prosperous, and they can help others like them to actually to be like them. And one of the way is actually turning our borrowers who are mostly one level above poverty level in Indonesia to become a driver for other people to be like them.
Amen. Look forward, Kiki. So thank you again, Nicole,
Sure.
Ben, Ganesh, Kiki, for your time, for sharing your analysis, your plans, and looks to be an exciting year ahead, and Dirgayu Indonesia. So thank you again for your time and sharing your views on credit and savings and the digital platforms and fintech possibilities in Indonesia. So thank you again.